Sam Bankman-Fried's landmark trial has come to an end, and it has been exactly a year since the historic FTX collapse. As you probably know, FTX collapsed spectacularly in November 2022 after insolvency issues and a frantic bank run. After several revelations and discoveries, Bankman-Fried was eventually accused of fraud, money laundering, market manipulation, and other crimes, and was promptly charged in court by US authorities. But how did this young billionaire go from being a crypto hero to a convicted fraudster? What were the charges against him? And what was the evidence that sealed his fate? And most importantly, what is the current status of FTX, the exchange that he built and destroyed? Now, let's get started. Sam Bankman-Fried, or SBF as he's known in the crypto community, was the founder and CEO of FTX, a crypto exchange that launched in 2019 and quickly rose to prominence as one of the leading platforms for trading derivatives, futures, options, and other complex instruments. FTX was known for its innovative features, such as leverage trading, market prediction, and tokenized stocks. It also had a reputation for being fast, reliable, and secure, attracting millions of users and billions of dollars in daily trading volume. SBF himself was a charismatic and influential figure who amassed a fortune of over $26 billion at the peak of his success, making him one of the richest people in the crypto industry. He was also a philanthropist who pledged to donate most of his wealth to effective altruistic causes and was a vocal advocate for crypto regulation and innovation. However, behind the scenes, things were not as rosy as they seem. FTX was actually operating in a highly risky and illegal manner, using a web of shell companies, offshore entities, and fake identities to evade regulatory scrutiny and manipulate the market. SBF and his associates were also engaged in a massive fraud scheme, where they used FTX's funds and assets to enrich themselves while lying to their customers, investors, and lenders about the true state of the exchange. They also used FTX's sister company, Alameda Research, a crypto trading firm, to execute fraudulent trades, inflate FTX's revenue, and conceal their losses. In short, FTX was a house of cards that was bound to collapse sooner or later. And collapse it did in November 2022, when a series of events triggered a domino effect that exposed FTX's fraud and brought down the entire exchange. It all started after major concerns about FTX began to bubble to the surface, after popular crypto news outlet CoinDesk revealed in an article that a massive portion of Alameda Research's assets were denominated in FTT, FTX's native cryptocurrency. Because FTT could not be easily exchanged for cash, CoinDesk's article stoked fears about the capital reserves and liquidity of Alameda Research and, by extension, FTX. A day after the article was published, Binance CEO Changpeng Zhao, or CZ, said he would sell all of the company's FTT holdings, which were worth about $580 million at the time. Not surprisingly, this comment triggered a wider sell-off of the FTT token, mounting insane pressure on FTX to meet the unexpected surge in withdrawals. Eventually, FTX had to halt customer withdrawals altogether because they lacked the funds to cover the outflow. 2 days later, Binance announced that it had reached a tentative deal with FTX to acquire the exchange and rescue its customers. CZ said that he was into talks with SBF and that he had agreed to rescue FTX through a buyout. However, this deal fell apart almost immediately after Binance conducted due diligence on the company, revealing its findings. Binance said, as a result of corporate due diligence, as well as the latest news report regarding mishandled customer funds and alleged US agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com. This was the last straw for FTX, as the company filed for Chapter 11 bankruptcy protections 2 days later on November 11 in a Delaware court, where it declared that it had lost billions of dollars in customer funds. FTX's bankruptcy was one of the largest and most devastating in the history of the crypto industry, affecting millions of customers, investors, and lenders who were left with little hope of recovering their money. The bankruptcy also marked the end of SBF's reign as the king of crypto, as he was arrested a month later and charged with 7 counts of fraud and conspiracy related to his role in FTX's collapse. He was accused of wire fraud, securities fraud, commodities fraud, money laundering, and conspiracy to commit these crimes. He faced up to 115 years in prison if convicted on all counts. He was also facing additional charges of bank fraud and bribery in a separate trial scheduled for March 2024. SBF pleaded not guilty to all charges and maintained his innocence throughout the trial, which began on October 3, 2023, in a federal court in New York. He hired a team of high-profile lawyers led by Mark Kwon, a former assistant United States attorney for the Eastern District of New York, who recently defended Ghislaine Maxwell in her sex trafficking trial. However, SBF's defense was weak and unconvincing, as the prosecutors presented a mountain of evidence against him, and testimonies that showed how he and his associates had orchestrated and executed FTX's fraud scheme. The prosecutors also called several witnesses who testified against SBF and exposed his lies and deception. Some of these witnesses were former FTX employees who had worked closely with SBF and had first knowledge of his activities. But the most damaging witness of all was Caroline Ellison, SBF's ex-girlfriend and former Alameda Research CEO, who had turned star witness and agreed to testify against him in exchange for a plea deal. Ellison gave a detailed and damning account of SBF's fraud and revealed how he had manipulated her and used her as a pawn in his scheme. In her teary testimony, she revealed that the collapse of FTX and Alameda brought an overwhelming feeling of relief to her, as she no longer had to keep up with the lies and deceit. SBF's trial lasted for 4 weeks and was closely followed by the media and the public, who were fascinated by the drama and the intrigue of the case. The trial also shed light on the complex and murky world of crypto and the challenges and risks that it posed for regulators and investors. The trial also raised questions about the ethics and responsibility of the crypto industry and the need for more transparency and accountability. On November 2, 2023, the jury reached a verdict after only 4 hours of deliberation. They found SBF guilty on all 7 counts and delivered a crushing blow to his hopes of acquittal. SBF's reaction was one of shock and disbelief, as he realized that his fate was sealed and that he was facing a long and harsh prison sentence. His lawyers said that they were disappointed by the verdict and that they would appeal the decision and continue to fight for SBF's innocence. The prosecutors, on the other hand, said that they were pleased by the verdict and that they had delivered justice to SBF's victims and the public. They said that SBF had perpetrated one of the biggest financial frauds in American history and that he deserved to be punished for his crimes. The judge, Lewis Kaplan, set SBF's sentencing hearing for March 28, 2024, and ordered him to remain in custody until then. SBF's trial was one of the most sensational and controversial trials in the history of the crypto industry, and it had a lasting impact on the perception and reputation of the industry. It also marked the end of an era and the fall of a legend who had risen to the top of the crypto world, only to crash and burn spectacularly. So, what happens to FTX, the exchange that SBF had built and destroyed? Well, FTX is still in bankruptcy and is still trying to sort out its mess and repay its creditors and customers. However, there is some hope for FTX, as the new leadership of the exchange, appointed by the court, has managed to recover some of the assets and funds that were lost or stolen by SBF and his associates. According to a report by CNBC, the FTX estate, led by John J. Ray III, has recovered $7.3 billion in cash and liquid crypto assets as of April 2023. But what's really interesting is that deep-pocketed investors are looking to revive the once prominent cryptocurrency exchange. The FTX estate has reportedly reached out to more than 75 bidders interested in rebooting the company. And now there are 3 finalists, namely Bullish, a crypto exchange led by former New York Stock Exchange president Tom Farley, Figure Technologies, a fintech startup, and Proof Group, a private investment firm. Reports suggest that the estate could pick a winner by December this year. However, not everyone is optimistic about FTX's future, as some experts and analysts have expressed doubts and skepticism about FTX's recovery plan. Critics believe that FTX has lost its credibility and trust, and that it would be hard for it to regain its customers and market share, especially in the face of fierce competition from other crypto exchanges, such as Binance, Coinbase, and Kraken. They also said that FTX's legal troubles were far from over, and that it could face more lawsuits and fines from various jurisdictions and authorities. They said that FTX's bankruptcy was a cautionary tale for the crypto industry, and that it showed the importance of regulation, oversight, and due diligence for the protection of investors and the public. Only time will tell how a revival of FTX will fare, but the odds are not looking good for it at the moment. That's all for today's video. If you found our video informative, then please like the video, subscribe to our channel, and press the bell icon to get updates on all our future videos. Also, let us know what topics you would like us to cover next in the comments below.